On July 20th, 2023, India, the world's largest rice exporter, banned exports of most non-basmati white rice. The government's stated reason for the ban was to preserve domestic rice prices after a bad crop due to uneven rains. The ban will cut at least half of India's rice exports. It has led to some panic buying of rice and toilet paper in Canada and the United States. Just kidding about the toilet paper, but then again, who knows? It is hard to overstate just how important rice is to the Asian food supply. It is the staple food for 2 billion people, and rice provides about 21% of humanity's caloric requirements. It is for those reasons that global rice markets are so vulnerable to disruptions. One such disruption took place 15 years ago, and I think it's worth looking back at. For this video, we're going to look at the Asian rice crisis of 2008. But first, let me talk about the Asianometry Patreon. Early access members get to see new videos and selected references for those videos first. Early access helps a lot, and I appreciate every pledge. Thanks, and on with the show. One of the most important events in post-war Asian history was the Green Revolution. After the end of World War II, policymakers feared a famine in Asia. The population was aggressively rising, and farmers were struggling to grow enough rice. Then in 1966, the International Rice Research Institute, or IRRI, released the first modern variety of rice, IR8, the miracle rice that changed the world. IR8 is a hybrid of a tall, high-yield rice strain from Indonesia and a sturdy dwarf rice strain from Taiwan. The result was a semi-dwarf rice with a then unheard-of improvement in yield. Where before the best-yielding rice gave you about 6 tons of rice per hectare, IR8 produced 9.5 to 10.5 tons. Incredible. Tropical farmers in India, Pakistan, Vietnam, and other Asian countries rapidly adopted IR8. Sadly, IR8's downfall was that it did not taste all that good. It also suffered repeated attacks from pests. So the IRRI replaced it with new strains down the line that tasted better and resisted pests better. One example is IR36. Released in 1976, it is still grown today, which makes it one of the most successful rice strains ever. Other innovations associated with the Green Revolution include advances in irrigation and fertilizer usage. So not only were we getting more crops out of each plot of land, we were also expanding the amount of land we were able to cultivate. From 1966 to 2000, the Asian population grew by about 90%. Paddy rice production more than kept up, expanding about 130% over the same time period. So, from the start of the Green Revolution to around the 2000s, rice production in Asia has gone up, and prices on the global rice market have gone down. There were a few bumps here and there. The biggest was the global food crisis in 1973 to 1975. A large El Niño event cut crop production in Southeast Asia. Then, for a few months in 1973, Thailand banned rice exports entirely. That was a real nail-biter. But overall, the trend held up. You had traditional dominant rice exporters like Thailand and Vietnam ramping up their production, though Vietnam exited the market for a while due to war and collectivization. In the 1980s, Asian governments liberalized their rice trading policies, bringing new entrants into the rice market. This brought down the market rice price yet further. India, for example. India first entered the markets in the 2000s and has since grown to be the biggest exporter of non-basmati rice. Today, in 2022, they ship more than the next 4 biggest exporters, and over 140 countries import their rice. New importers, too. The Middle East and African countries became significant rice importers throughout the 1980s. And interestingly enough, China too, the world's largest rice producer. They had been once a top 3 rice exporter as late as 1975. Today, they are the world's largest importer of rice. Rice is Asia's single most important food, but not in terms of actual economic value as measured in output. Even back in 1961, rice production accounted for less than 7% of East Asian GDP, 8.4% in South Asia, and 14.5% in Southeast Asia. And in terms of world GDP, it was a bit over 0.5%. Over time, that share has gotten even smaller. In 2007, rice production was worth less than 1% of East Asian GDP, 2.7% of South Asian GDP, and 3.8% of Southeast Asian GDP. And in terms of global GDP, rice was just 0.174%. Rice is an inferior good. The richer you are, the less of it you eat. Rice's peak in Asia, calorie-wise, was in 1970 during the early years of the Green Revolution. Back then, it provided 38.2% of people's calories. Today, Asians spend less than 5% of their budgets on rice and get 70% of their calories from things other than rice. This number differs by region. The drop was especially large in the Republic of Korea, 49.8% in 1980 to just 6.8% in 2007. The People's Republic of China experienced a big decline too, 38.7% to 26.8%. So economically, rice is not worth all that much, and that is exactly why it matters so much to the poor. Rich countries and rich people can go buy chicken breasts and avocado toast to get their calories, but poor people in Asia and the rest of the world need rice. Rice's low economic value but high food security value mean that most countries reserve their rice production for domestic consumption. Only about 7 to 8% of the world's total rice production goes across countries' borders as part of trade. This makes the international rice market quite thin, with fewer transactions than that of other grain commodities like wheat. Such a thinly traded market can be vulnerable to disruptions. 2000 and 2001 marked a historic low in global rice prices. After that, prices started trending upwards again. From 2001 to 2007, real rice prices grew at about 1% a year. There are a few reasons for this. One big reason is simply that rice prices were too low. Their lowest in over 100 years. We should expect some snapback. But you can look at a few other factors too. Rice yields stopped growing as fast. Nations were investing less research and development into rice agriculture in the 1990s and the 2000s. The changing climate seemed to have impeded rice yields too. Modern experiments with the original IR8 rice strain find yield declines by about 15%, or 1 to 1.5 tons per hectare. The most significant cause was a, quote, changed environment, end quote. Another factor was oil and energy. Oil prices hit a low in 2000, but rapidly rose after 2001. This affected the cost of critical inputs like fertilizer and rice-growing tools. Another thing was that the low rice prices of the late 1990s were artificially suppressed by the big currency devaluations after the 1997 Asian financial crisis. The Thai baht, in particular, took a massive tumble. This raised rice prices for ordinary Thai people as it raised the cost of inputs like oil, but the low baht also made the rice price, as denominated in dollars, way cheaper. Back then, the Thai government opted against export restrictions to keep domestic prices down, perhaps because they needed the foreign currency so badly. But after the crisis passed, the Thai economy recovered and the baht currency returned to its previous levels. This trend of rising food prices accelerated in 2006. As America fell into recession in the wake of the global financial crisis, the US dollar weakened, which caused dollar-denominated oil prices to rise. Higher energy prices in turn caused food prices to go higher. Corn and wheat prices more than doubled from January 2006 to October 2007. Wall Street hedge funds, pension funds, sovereign wealth funds, and other commodity speculators pulled their cash from stocks and bonds, putting them into these global commodities. Despite this, rice prices stayed relatively stable, growing just 12% over the same time period. That is because the global rice supply situation was quite solid. Rice production in 2007-2008 in Asia, Latin America, and Africa reached record levels, and supplies were the highest in 3 to 4 years. In 2007-2008, the ratio of rice supplies to consumption was about 18.3%. Despite this, there were some concerns, primarily related to the weather. Floods and Cyclone Sadir damaged Bangladesh's rice crop, cutting it by 1%. It doesn't sound like much, but this forced Bangladesh, which back then hosted 145 million people, to raise their rice imports 3 times over. Bangladesh is a country that seems to be always living on the knife's edge when it comes to rice production. We also had the ongoing millennium drought in Australia and a cold snap in China. These took some smaller-sized rice exporters out of the market. Ultimately, however, the most proximate trigger for the 2008 Asian rice crisis was not fundamentals, but fear and runaway demand for rice. All the way back in October 9, 2007, India put a temporary halt on all exports of non-basmati rice. Back then, India was the world's second largest rice exporter, providing 17% of the world market from 2002 to 2006. 3 weeks later, they resumed exports, but set a minimum export price that was way higher than the quoted price on the global markets. For example, the first minimum export price at the end of the month was set at $425 a ton, $100 per ton higher than what was quoted in neighboring Pakistan. None of this really did much to the rice market at the time, but then a few months later, in April 2008, India once more declared a total ban on non-basmati rice exports. This one got people's attention. Why did India take the first step on this? In the previous year, 2006, India had suffered a bad wheat crop. This meant that the country had to import more wheat than usual for the 2006-2007 period, about 6.7 million tons. In order to keep the country's big food security distribution system, the public distribution system, supplied with grain, India limited their rice exports. Over the past 7 years, India had been running up a big food subsidy bill. It really took a big jump in 2001, when the public distribution system cut their release grain prices and forgot to raise them again. And with the country ramping up for the coming elections, now was not the time to lift those subsidies and expose the voting poor to higher food prices. So something had to give, and that was the rice exports. For whatever reason India did this, it had a massive effect on the global rice market. In 2007, India provided 5.3 million tons of the 32.1 million tons of rice traded around the world, and even though their ban was not as total as it might have been implied, the rice markets panicked accordingly. Big rice importers like Indonesia, the Philippines, Bangladesh, and Nigeria would have to turn to the other big rice exporting countries to make up the shortfall, namely Thailand and Vietnam. Rice prices surged. In January 2008, rice was quoted at about $375 per ton. By the end of March 2008, that had grown to $594. The New York Times reported food riots in Guinea, Mauritania, and Mexico. Even people in the States were buying more rice than normal. That was a bit ridiculous. Richer countries would ride the whole thing out just fine. But in poorer countries like the Philippines, the lack of rice was destabilizing. President Gloria Arroyo ordered a hunt for rice hoarders. And then came Vietnam. Vietnam's rice policies are opaque. The government issues an export quota shortly before one of the country's 3 harvests in the year. These sales are executed through Vietnam's 2 state-owned enterprises, Vinafood 1 and Vinafood 2. So in mid-January 2008, Vietnam issued their rice export sales quota as usual. But then in late March, early April, they halted export sales due to fears of unusually cold weather in the Red River Delta. Later in the month, this sales ban was extended to June. Worse yet, Vinafood 2 had sold more than what they can promise. They sold 622,000 tons of rice to the Philippines for delivery by the first quarter, but ended up only delivering slightly more than half of that. Desperate, the Philippine government struck a series of direct deals with Vinafood 2 at increasingly higher prices. It was a terrible use of taxpayer funds, and it created the notion that rice should be bought at any price. Fear in the rice markets continued to spread. In March 2008, Egypt and Cambodia both announced or extended rice export bans. Though the countries are not big rice exporters, Cambodia, for instance, is a medium-sized exporter that mostly exports just to Vietnam, their actions nevertheless spread more fear through the rice markets. There were food riots in the Philippines, Egypt, Bangladesh, and much of West Africa. Egypt's food riots were especially bad, the worst since the 1970s. Traditional big rice importers announced that they would enter the market and build up their stocks of rice. Nigeria, Bangladesh, and Iran piled in for no reason other than to get ahead of rising prices. Their purchases are usually executed throughout the year, spreading out demand. Having everyone enter only caused prices to rise even further. In a single month, rice prices went from $594 per ton to $907, jumping over 50%. As the crisis developed, Thailand, the Saudi Arabia of rice, sold more into the market. In the 6 months after the first Indian rice restriction, Thailand exported over 1 million tons of rice each month. But then in mid-March 2008, the Thai vice minister talked about putting a cap on rice export prices. And then a few weeks later, their minister predicted rice prices of $1,000 per ton and urged farmers not to sell. I can't say this was responsible. Rice prices at the end of April 2008 were already breaking $900 per ton. If Thailand banned sales too, then prices might have exceeded their inflation-adjusted record of $2,700 in April 1974. Then a few weeks later, the Thai government resurrected the old idea of joining with Cambodia, Vietnam, and Burma to create a rice cartel, the Organization of Rice Exporting Countries, or OREC. This dumb idea was dumb back in 2001, when then Prime Minister Thaksin Shinawatra first proposed it. And now, in May 2008, it not only still looked dumb, but also predatory. Cambodia endorsed the idea, but the Philippines was extremely angry over it. Thailand quietly nixed it a week later. In the end, Thailand never halted sales. They injected an extra 3 million tons of rice into the market at a crucial time. They probably could have sold another 2 million more had their sellers not held out for higher prices, or if they had tapped their massive government rice stores. By the time they actually did open those storehouses for sale, the crisis was already over. Classic Wall Street bets degen behavior. In early May 2008, the rice crisis only seemed to intensify. On May 3rd, Cyclone Nargis struck Myanmar's Irrawaddy Delta, a key rice-growing region affecting 2 million tons of rice. Prices remained elevated. How do you pop a bubble? By stripping the fear from people's eyes and letting them realize that prices have separated from the fundamental reality. On May 8, 2009, 2 American economists at the Center for Global Development, Peter Timmer and Tom Slayton, authored a paper called Japan, China, and Thailand Can Solve the Rice Crisis, but U.S. leadership is needed. In their note, they pointed out that Japan had imported 1.5 million tons of rice from the U.S., Thailand, and Vietnam. This is due to prior obligations from the World Trade Organization. The U.S. has long fought to crack open Japan's very closed rice markets, and they did manage to get Japan to buy this foreign rice. But you can lead a Japanese horse to rice, but you can't make them eat it. The Japanese don't want to sell this medium-grain rice into their domestic market, perhaps because they don't want Japanese consumers developing a preference for it over locally produced and far more expensive short-grain rice. But at the same time, Japan can't re-export this purchased rice elsewhere in fear of violating their WTO obligations and incurring political repercussions from the United States rice industry. So they just leave it there. Some of it goes to North Korea as food aid, but most of it just sits in warehouses until it degrades enough that it can be fed to chickens and piggies. So why not have the US allow Japan to sell that rice to the countries most in need of it, like the Philippines? The same day the paper came out, news broke that Japan and the Philippines were negotiating on a rice deal. On May 12th, the US Congress held a few hearings, and then soon after that, Japanese and American trade officials held meetings to discuss it. Bloomberg then broke a story quoting an unnamed US trade official saying that the US would not object if Japan were to release their rice stocks. The mere possibility of them doing so caused prices to decline in both the US and Thailand. Futures traded in Chicago fell for 4 straight days after the news broke, and rice futures in Thailand fell 29% from May 13th to June 3rd. In late May 2008, the Philippines and Japan struck a deal for 200,000 tons of rice, and then a few days later in June, Japan pledged to sell 300,000 tons of their stored rice to stabilize the markets. The simple announcement was more than enough to pop the rice bubble. Japan ended up exporting even less rice in 2008 than they did in 2007. They never needed to, after all, the rice had always been there. Rice prices in Thailand fell back down from $1,000 per ton in May 2008 to $550 at the end of the year. From then until as of this writing in August 2023, prices haven't since cleared $634 per ton. In mid-June, the Philippines and Vietnam sealed a deal for 600,000 tons of rice. A few days later, Vietnam lifted their export ban, ending the Great Asian Rice Crisis of 2008. Policymakers have since studied the Great Asian Rice Crisis and those countries affected by it. For instance, another poor Southeast Asian country, Indonesia, largely sidestepped the rice crisis thanks to a good harvest that year. China and India sailed through relatively well by relying on massive rice stores. Countries realized the risks of relying on external rice markets for critical domestic needs, and since then they have tried to expand the amount of rice grown within their own borders. Now, 15 years later, India is again cutting down on rice exports. Does India's ban herald another wave of crazy rice prices? Rice prices are already on their way up. Who knows? I would like to think the world is a bit more prepared now. But as Lenin once said, every society is 3 rice bowls away from chaos. Alright everyone, that's it for tonight. Thanks for watching. Subscribe to the channel, sign up for the newsletter, and I'll see you guys next time.